Okay, so welcome everyone. And how you guys doing? Welcome to today's market wrap up. It's Bretton's Friday's market wrap up. Today is the 23rd of April, 2021. We are ending April very soon in about a week's. So we want to look at how the week has actually been, but most importantly, what to expect for the 24 hours before market closes, how the market has actually been, as well as how the wrap up, how did the wrap up of the market would actually impact next week's trading opportunities as well. But of course, we have Monday's webinar to go through as well, so that I can help you guys plan what to actually trade for the whole week. So Mr. Palani, you have your GBP USD. Yes, it's given the hint already from the time that we were analyzing that it's more to the downside. So it has actually gone down quite a lot. Now it's reversing a little bit. But what I expect is that it reverses up a little bit, but then it is not very clear to go up as a clear uptrend at the moment for GBP USD. It's just going into maybe consolidation or something like that, but it's maybe it will find resistance again very soon, because right now it's trending at the 138.50s area, if I'm not mistaken, and it looks like it may actually come down more. And when it actually comes down and breaks the 138.50 area and go down under 1.3850, like let's say 1.3840, you can actually then sell again there, because what we can actually do is, if you are looking at buying opportunity, maybe it's not as good as selling opportunity for GBP USD because of the trend and the situation that is happening at the moment. Of what we can see that maybe you will have some selling opportunity in this zone here. Okay, so this is, let me mark it as a red. So red means selling zone. That actually means that they may be, if price were to drop further, now it hasn't reached that number yet. Give me a second. Let me just. Okay, so this zone right here from the level of 1.3830 area, okay, right down to, let's say, this area. Let's get rid of that. Right down to the 3760 area is quite a significant selling area. Okay, so selling zone. So if you want to take more trades on GBP USD, maybe it's better to take trades on the downside on selling rather than buying, because at this moment of time it looks like it could actually be quite risky to take the GBP USD on the buying side, mainly because of how it looks as well. And also we are looking at USD strength much more. Now, mainly number one thing that have actually happened yesterday in the United States of America is President Biden. He has actually announced the 44+% capital tax, capital gain tax. So that has actually risen the US dollar quite a lot, but it has caused a lot of fall in the stock market. So that's why stock market in Asia as well suffered this morning quite a lot, mainly because of that. So usually the Asian stock market as well, it follows through what has actually happened in Wall Street, US stocks. So if US stocks were to also fall, then when the opening sessions of the Asian stocks will also follow through and fall as well. So that is what has actually happened throughout the day today. So this is for GBP USD. We can actually further analyze GBP pairs as well. But I want to go through a few pairs first, and then we go back to the market and look at the heat map as well, because I want to share with you guys on certain pairs that can actually be traded today, and because it has actually broken out from some triangles or some support resistant levels. So one of it is USD CAD. Now USD CAD, I've actually seen a lot of selling opportunity for USD CAD since a week ago. So since last week, basically, because of the strength of the Canadian dollar, because of all the US economic data and things like that, sorry, the Canadian data, economic data has been very positive, and a lot of things revolving the COVID cases in Canada as well has been very positive. Give me a second. And that basically is one of the reasons that has actually caused Canadian dollar to actually go up and then weaken the USD for the USD CAD pair. So what I'm actually seeing at this moment of time is we are looking at more downward pressure for the USD CAD. Now, of course, USD is seen to be stronger, so we want to also look at gold's position. But I have explained to quite a number of traders as well that I am not looking at gold at this moment of time, but I'm preparing trades and areas for the sell, not for the buy for the gold. So I have actually prepared, I've researched the market a little bit from what has actually gone on with the bonds situation, and now with the tax surprise by Biden yesterday, it is going to increase the value, not increase the value, sorry, increase the trend for the US dollar. So because at that time, about 3 weeks ago, a month ago, I've researched the market and I've seen that there are more and more reason to believe that the US dollar would probably go up much more. So then I didn't actually want to plan any buying of the gold, mainly because I'm not sure until where it would actually drop a lot more. So now, for example, next week, I think we would expect more falling of the gold and more rising of the dollar, because we are actually on Friday now, and there was this surprise tax, which is very, very high, 44 plus% tax on capital gains. So this basically is going to promote more strength for the dollar. So we are looking at more dollar strength next week, most probably. And then we are looking at more fall. I would think more big fall in gold. So I wasn't sure on roughly when. So hence the reason I pulled back from not entering any trades for gold, because I don't want to get trapped in there. So that's basically what I have planned for gold, and also for a lot of USD or major crosses for next week. So we will take a look at that a little bit. COVID case, yes, now it's also has been an emergency that has been announced in Tokyo, in Osaka as well. And Japan, covers a lot of safe haven trading and a lot of things. And now economically, they are actually, in need of more cash coming in. So what they usually do is they sell their assets outside of Japan. So what would most probably happen is JPY would actually go up, most likely because of that. Okay, so we want to be very careful with not trading, with trading, but understanding the mechanics behind it as well. So yeah, in China, basically, it's already improving quite a lot. So when you look at China's improvement in all aspects, they have to meet all the demands and everything. So they have organized it really well at this moment of time, because they know how to control the corona now more than any other country, because it started there. And also they have actually clamped down very fast actually compared to all other countries. So for them to actually repeat that same process again, it would actually be quite easy for them to do so. So it wouldn't be very high impact on China, but then on China itself, but it will be, like you said, a very big impact on other countries, especially in the Eurozone, for example, because the Eurozone and UK and all that, they've got to work together to rely on one another to actually clamp down the COVID cases. The US and Canada separately. China and other Asian countries are quite separate as well. So this is quite a difference in the way Asia, the whole of Asia works. In Asia, even though it's a big continent, but all the Asian countries sort of working on their own. They don't actually clamp up together to create an alliance like what is happening in Europe and what is happening in Europe. All the European countries, like 11 countries, including France, Italy, Germany, and all that, they actually come up with an alliance model to work together with the UK as well. And then you see that the US and Canada as well has got some alliance, but you don't really see that very clearly in Asia, mainly because of the population, because it's enough already for the population themselves to control their own population and to do things like that. So maybe that's the reason. So it works very differently in Europe and also in Asia, or even in America and Canada. So yeah, but what I can see is huge falls and huge rises in the greenback, the US dollar as well. And the thing about gold as well is quite tricky because we have, I mean, from a technical perspective, we have the double bottom here. You've got a double bottom. So this double bottom is usually signals upward movement, and it did actually go up. And with the upward trend, and I need to combine that with some fundamental aspect as well, because a fundamental aspect of what goes on is the fuel that would actually make your pattern or your signal or your EA become more accurate or not accurate, you see. So you need to combine them together. So you need to look at the fuel as well, which is the fundamental and the news and the mechanics behind it. So now, for example, the mechanics behind gold's price movement is more leaning towards a downside movement. I'm expecting falls. So here, for example, together with that expectation of the fall for gold, I see that we had a very nice run and bought and also exited following a very nice ABCD pattern going up, and it's quite close to where the D point was, but we've exited much earlier as well because of all the resistance level. Now, if we were to focus on the downward movement of gold, we can actually look to the left here in this area. The most recent left is this area right here. So when we look at this area, we can see that we have got quite a number of very bearish single candle, okay, single mother candle. So I will lay out this zone right here, okay, to be selling zone. Okay, so there you go. You've got selling zone there, right? Based on this mother candle right here. And then just take a look at how they are laid out is quite systematic as well, this selling zone based on the mother candle itself. So then, following this candle here, we'll take the zone all the way down here, right? And then we see another mother candle here. So my expectation is we need to look at this candle here as well, and then extend that further until the end or closing price of that candle. Now we don't have further longer candle, but then again it was here. So you've got another mother candle right there, right? So then we extend that red zone again, and we need to actually monitor from Monday onwards. whether or not we have more fuel on the fundamental. As of now, for this week, that surprise attack by Biden and the US for the 44% plus capital gain tax is a very, very big thing. So hence the reason that tumbled the stock market yesterday for the US, especially, and tumbled the Asian markets, not so much, but then we're expecting more tumbling of that. So you imagine how it would actually impact the US dollar to the upside. So we want to monitor that when we look at the heat map as well, and monitor both US dollar and gold, but monitor US dollar a lot because the surprise attack came from the taxes side of it, which basically will impact everything. It will impact earnings of stock companies. It will actually impact even inflation as well. So the impact is a lot. So because of that, monitoring the US dollar and what has actually happened yesterday, a lot of traders, investors might still not realize what impact it could actually become, like a dominoes effect, you see. So then we need to look at next week. So my expectation next week, we will have loads of trading opportunities, of course, but we want to be very careful. But we want to monitor the dollar, especially because of what has actually happened yesterday. Okay, so here, for example, we have got a very big selling zone. Basically, it's a trading zone for selling, and this is how big that selling zone could potentially be. Because if I look at my research on the dollar and all the US pairs, like USD pairs, like the major pairs, it looks like it's got similar amount of trading opportunity, but on the upside, you see. So because of that, this does mirror and match with what we expect on the fall for gold. So be very, very careful, okay? Because you've got a lot of selling pressure, selling zones by a single bearish candle as well, here on the upper side and there on the lower side. So hence the reason we've got a very big area or zone for selling the gold. And then this might also be connected with what might actually happen with oil. So oil, we need to be very, very careful. We have sold oil already. Oil was on the downside, stuff like that. But because of Biden's decision on the taxes, it might actually change the course for oil as well, especially US oil. So together with what Biden has decided, it looks like technically as well, oil is sitting on some very important support level. So that is matching. Technical is matching with fundamental. When technical is matching with fundamental and it creates some trading opportunity for a trend direction, then we have a marathon of trend. If we have a marathon of trend and we use the right strategies, then we can achieve consistency and also a marathon of profits and enter the market and keep entering the market. And that's basically how I have actually been trading all throughout, because I'm really very weak in trading in within a zone, within range, or anti-trade or scalping. That basically is not my area of specialty. There are other traders that are more skillful in doing that. So but the reward that you get from trend trading and combining fundamental and technical is very, very big, because it will compound, because it lowers your risk. You won't be trading as much, but when you are trading, you are going into a very nice run of profits, and very consistent and very big chunks of profit. So that would actually be covering all the time that you are not trading. So a lot of traders also, they think that when they actually trade a lot, they are if you are trading a lot and you are entering the market a lot of times, and you are mixing between trend trading and anti-trend trading, sometimes we may fall into the trap where you are trapped in a trade that you cannot afford to let go because you have lost quite a lot already. So if you are into a market that is on the wrong side and in the wrong trend direction, but then you are already in loss, let's say, and you've got your stop loss as well, but then your loss is quite significant, you are almost trapped to have that either closed at that loss. So that will be a chunk that lowers down your equity again, you see. So this is basically a decision that needs to be made by majority of traders of how they want to trade, the style of trading. Do you want to anti-trade as well and all that? There is no right or wrong in the style. It has to fit with what you feel comfortable with, as well as your risk management or your risk appetite. Okay, so now here with oil, for example, we have a lower high already right there, okay? And what we need to look at is if at all we are expecting more fall, it needs to break from this support area right here, okay? So the support area, I mean, the strongest one right there is further, it's lower right here, the support level. And if it goes under the support level, then we are looking at more price fall for oil. But if we look to the left, if at all, let's say we play a scenario in our mind, if prices were to fall and go beyond this, go under this yellow line at 57.31, when I look to the left or the most recent left, I don't see any backup from sellers in the past. I don't see a backup by sellers through very long bearish candle, mother candles. I don't see that. So I am doubting the potential of price falling all the way down this way. What could potentially happen is maybe the investors and traders, they want to buy oil cheaper. So it could potentially drop to the level of 59.69 here, okay, because this is where the bearish candle stopped as well. So it was supported by a price here, okay, and it might actually come down to 59.57, let's say, before it rises up. So that is another potential. So if we look at price coming down first, we wait for those oil traders to come down to 59, or you can sell until it comes down to 59.57 area. If it starts to pick up, then you might look into buying it, but you can actually then start to draw a ABCD pattern. Okay, so I wouldn't want to draw an ABCD geometric pattern now, because this is not sure to be a C point yet. Okay, so I would think that your C point would be better in this area at 59.57 area. So for those of you who wants to sell, for example, you can actually sell, but then be very wary and careful as well for the oil sell, because you have price could fall either to the 59.57 area or a little bit earlier, mainly because we have the 50 EMA there. So it might come down and bounce off from the 50 EMA as well. So, but anyway, in this area would actually be your C point. So then I would expect price to come down to create the C point somewhere around this area. Okay, so then let's say, so I will draw an arrow here because this is what we expect the C point to be. So now it's probably best not to see the C point here yet, because price can even go up as well, and go up and go down, making a sideways movement as well. We don't know that. But so as long as price does actually come down first to this area, then it might actually give us the hint that the investors and traders want to buy oil cheaper, because you usually want to buy low and sell high, right? So then this could actually be a scenario. And then if it does come down to the C point and start to reverse, then we might expect the movement of oil to go back up again, to go back up here, right? Second. Okay, to go back up to that area. And coincidentally, that AB equal CD, and that C point, the D point there is also this area of resistance, which is a good sign. So but the thing is that if I was to take the buy order for oil, I'll start at the C point, or maybe better still at the centroid area. Okay, so your centroid is around here. Okay, so it's very close to the price right now, basically. So we're talking about the buy potential. So it's 61, let's say 61.84 and above will be your ideal buying price. But then maybe if you buy oil, not to actually get overly excited, to just wait until price go to the D point, mainly because you have a threat at the moment with the resistance of a opening price of a bearish candle here. So your entry should actually be just slightly above the centroid area, above 61.84. But for oil traders out there, I would suggest to actually buy above 61.84, but to take profit not until it reaches D point, but slightly below 64.42. So you can actually take profit at 64.40. Okay, so you buy, let's say 61.85, you take profit at 64.40, 64.35, entirely up to you. But then you need to respect that bearish candle there that has actually brought prices down, and the opening price was there at 64.43. Okay, so that's for oil traders. Okay, so we've covered that a little bit. Any questions at all? What should we actually take a look at in terms of currencies? We've gone through USD CAD a little bit, GBP USD, and we've also gone through with gold, with the expectation of that whole red zone or selling zone for gold. With regards to GBP AUD, it looks like it's heading downwards, hitting all the TPs that we have hit for the buy order, is becoming TPs hit for the sell order as well. So that is basically what we can see, but I don't really see very clear trend at the moment. So now, hence the reason we probably need, this one here is drawn a little bit too early maybe, but we are still monitoring this CHFJPY. It is all nicely laid out, all the buy zones there, but it's just so early. So maybe we will take some shorter medium-term trade and leave that pattern there. It's just that it wouldn't touch wouldn't trigger your buy order yet anyway, because it's just too far away, okay, at this moment of time. But now it is consolidating the CHF-JPY, and with what's going on in Japan and what's going on with the CHF as well, there may be still possibility of a rise up to this level, but we don't know roughly when. But the thing about the CHF JPY personality is that if the move happens, it happens even with a 200, 300 worth pips in a single mother candle. That's how the CHF JPY can actually work. So that's why we have a bit of an early trade signal on the CHF JPY. Okay, we can look at the USD CAD, which we did earlier on. So for the USD CAD, for example, because we are expecting what do you call that, more strength on the USD, and give me a second, the euro AUD you meant, right, Alfred? Euro AUD. Okay. Euro AUD and also USD CAD, right? Okay, we can take a look at both. USD CAD first. Now with the USD CAD, it's a little bit tricky, but from what when I say tricky, what I mean is that we have got two pairs that potentially can be bullish, both USD and CAD. So when you have bullish and bullish, or bearish and bearish, it is a bit challenging and it's a bit more tricky. When you have one that is totally opposite direction to one another, and then you've got the fuel from the fundamental side of it, then you have got the potential to ride the trend strongly. But at this stage, what we can actually see, USD CAD on the daily chart, that's the triangle I've actually drawn, and it looks like it's trading in beyond or in within, sorry, the triangle, and tries to come into this corner here before it breaks out. But at this moment of time, it is trending. It's trading already at 1.24838. So 2480 is really, really very close. So what I will do is get rid of all these lines, and just to get more clarity, so we can actually see. Now, if I were to look at it from the daily chart, we want to always look at it from the perspective of trend when we're actually conducting a technical analysis. We want to start with trend analysis on the technical chart. So you're looking at technically, trend-wise, you're seeing a nice flow of the three lines going downwards on the daily chart. Now, when I discussed this with some traders yesterday in South Africa, I see that as of yesterday, 8 o'clock my time, I think it's about 1 a.m. your time in Malaysia yesterday, or late last night, or early this morning, your time, I see a conflict between the 4-hour chart and the daily chart. So the 4-hour chart indicated to me, and it still does, indicated to me that there may be a bit of a weakening of the downtrend. So overall, when I compare one time frame to the other time frame for USD CAD, it's mainly on the downside. It's mainly downtrend. Overall, it's mainly downtrend. It's governed by a lot of bearish, very strong candles to the downside. Okay, so me as a trend trader, I will only look at potential of selling the USD versus the CAD. Now, the 4-hour chart also indicated some rise up of price. So that's why you see some bullish candle. The only reason is because there's been a bit of a conflict between the 1-hour and the 4-hour, the 4-hour and the daily. So mainly it's on the 4-hour chart where you see the three lines just gone tilted up a little bit. But then when you go on to the daily chart, you can see that the flow is quite strong to the downside in terms of the trend. But how strong is the trend on the daily chart? You need to actually go and apply the average directional movement index, which is your ADX. Now, the strength, the trend itself is biased to the downside, let's say on the daily chart. But then on the daily chart itself, when you apply the ADX, there is no strength of the downtrend. When we say there's no strength of the downtrend, mainly because of the ADX, you see that the blue line is under the level 25. What that means is that we don't have enough participation of traders going into the pair to trade that pair. So it's not moving. It might not move that fast and hit our TP as fast as we expect. So that's what it means when we don't have the strength, and that is usually communicated or could potentially be indicated by the ADX. So when I go back to the 4-hour, I see the same thing. I see that the trend, the current trend, which is more on the downside for USD CAD, is not very clear and it's not very strong. Okay, so here, for example, if I go on to 1 hour, you've got a little bit of strength right there. Okay, but it's not enough, because it's if you connect the 1 hour with the 4-hour and the 4 with the daily, and then even if you go on to the weekly, it's just not very clear. The whole three lines start to not be clear as well. But then you've got the ADX having some kind of strength. So what that means is that the downtrend would probably pick up a lot more in the medium to longer term. As of now, USD CAD may correct to the upside. So what we do then is, for those who would like to trade anti the trend, or would like to trade in both directions despite of the trend, then you need to actually look at the power of the buying, the buyers, and you need to look at where in the past you have got all the buyers lined up in terms of, from the perspective of a single bullish candle. Okay, so here, for example, 2660 pending order buy for which one? For USD CAD. it's too far away. So yes, you can actually close that. Yeah. Because it's so far away, and now we've gone downwards to 2483 already, so that's 100 plus pips, right? So it's just too far. If it's too far and it's on a pending order, you can just close it, because it's probably, maybe you want to ride the downtrend instead, so you can close that one there and ride the downtrend instead. But then we want to look at maybe potential for other traders who are not trend traders, wants to actually ride the uptrend as well. For now, we don't know that yet, but what we can actually do is to look at whether or not we have some divergence. Okay, so divergence is quite a tool for us to use, so we can go and apply the stochastic. So when you apply the stochastic, just so that you see whether there is divergence. If there is divergence, that means there is a mismatch. If there is a mismatch, then you get an idea that the market might actually reverse. So right now, the market for USD CAD is towards the downside. Okay, but then we want to look at whether or not we have divergence. So here, for example, we look at the highs and the highs, the lows and the lows. So let's start with the daily chart for now. Now, with the daily chart, for example, you've got the high here, which reflects this high, and that high there is this high, right? So what we do is I take this high here and I connect it to that high. Now, this high here, which resembles that high, is connected to this high, but look at the difference. There is a difference, there's a mismatch, there is a divergence. This is a higher high, but this is a lower high. So you've got an upward slope, but this one here is a downward slope. So on the stochastic, doesn't match with the candlestick prices. So that means you've got a divergence. So a divergence meaning that there may be a reversal coming soon. When exactly, we don't know, but we need to be very careful. So what that means is that there may be a reversal to the upside coming very soon. So what we need to be careful about is where can that reversal happen. So that reversal is to actually ride along an upward corrective movement. For those traders who also anti trend trade, you can then look at where you can actually buy. But most importantly is you want to look at the left and look at where could it actually have been good price to buy by other traders and investors in the past. So what I can show you here is what I have noticed is that you have got some buying area down here, right? But most recent, let's say if we go to the left, you have got another buying area before in the past that started a little bit higher here. Okay, now the price is at 2480. This is at 2512, not very far away. So what that means is that in my opinion, if you want to go for the buy, it's probably better to wait a little bit until the price goes up a little bit and go above 2500, and then you can enter at 2510 and buy, and then exit at this area right here where the price has actually closed. So the price has closed on that mother candle, the bullish candle, at 2600. So maybe, just maybe, there is a potential of correction up to anywhere between 50 to 100 pips. So this is what it means. Okay, so that's why it's quite important for us to look at mother candles as well, to give you a hint. I don't see any very long candles that took from here all the way up here, but I see continuation of mother candles. So and that mother candle there also quite close to that mother candle, bullish mother candle there. So this is an indication that yes, there is a potential of reversal. If it does reverse for USD CAD, reversal is a corrective move. Okay, so for those who wants to buy, it does not mean it's an uptrend for the USD CAD. It means that it's a corrective move or a correction and a reversal, and you want to trade that uptrend for only temporarily, not forever, okay? Because it's not a very strong trend that has actually come up for the USD CAD on the uptrend. It's not changed the trend yet, in my opinion. It is still quite strong on the downside. You can see this very, very clearly. It's a river flow downwards on all the three EMA lines, and it's all going downwards. So it's only natural for it to take a little bit of a corrective move, but I think that corrective move may have a limit anyway between 50 to 100 pips. Okay, so this is for USD CAD. So you need to plan your trade a little bit better. If it depends on what you want to do. You want to trade anti-trend trade, you know that you've got a limit 50 to 100 pips there. You know the area that you can actually buy, where you need to exit, where you need to enter. Okay, maybe you can make your simple smaller 30 pips as well. Let's say 2510 you buy, 2540 you sell. But you know, the reason you do that is because you are in a downtrend, most likely in a downtrend for USD CAD, and you don't want to buy or anti-trade too big pips. You want 20 pips, 30 pips, because any fuel could come in to change your whole plan as well. We don't know that, right? So we want to cautiously trade when you are, especially when you are anti-trend trading. You are trading the correction, for example. You have to be very careful and not take too big pips chunk. 20 pips will be nice, you know, 20, 30 max, but then not more than that, especially when you are anti-trend trading. Okay, so this is for USD CAD, and we shall look at Euro AUD as well. So Euro AUD, I've laid out some selling area right here, but it's again too far from the current price right now. I see that there are potential for Euro to pick up on the fundamental side as well. But then it is wishy-washy. Okay, it's not very clear what goes on in Europe at this moment. Always you've got a bit of positivity and then brought down by more negativity and stuff like that. So that's been going on in the Eurozone. The fundamentals in the Eurozone, not very reliable at this moment of time, but the fundamental on USD, Texas, is quite good. It's quite strong as well. Okay, push the dollar to the upside. But then again, anything can happen anytime. We just have to match that and monitor the market from fundamental and technical perspective as well. So here on Euro AUD, if I were to look at straight away at a bird's eyes view or at a glance, then I can see that you can actually draw some lines already on the 1 hour chart. You know that you've got an area right here. If you bring this one down here, this is an area where it has trapped price to move higher. So it's got this resistant area right there, and I can maybe collect all this here, so you know that you've got more hits on all the wicks right there, and then hit on some bodies as well. If I move this one down just a little bit, oop, that one there, okay. This one may be a little bit lower there. Oh, 1 second. There you go. So then we know that you've got a very strong type resistance there. And also this is on the 1 hour chart itself. Now looking at the price at this moment of time, we are trading at 1.5560. As price move up, of course, it hits the 5580 psychological number, but then on the downside, we are looking at a closer reach of the psychological number 5550. So you want to lay out that 5550 area as well. So you've got 5550 right there. This is for the shortest term. When you're looking at 1 hour chart, you're actually looking at the term time between 30 minutes to 1 hour. So in within 1 hour, what could actually happen can actually be seen on the 1 hour chart. Actually, it's up to 1 hour, but it's usually less than 1 hour. So it's quite short term, maybe about 30 minutes or so. This is what could potentially happen. So here, for example, if we look at the price right now for Euro AUD, as price moves up, what it could actually do is you need to look at the risk side of it. There is a risk of price turning back down from this area right here. So you've got a resistance right here, okay? And that resistance is quite strong resistance because it was followed through by some, a long bearish mother candle as well. So then I want to look at this zone as well as a new trading zone in a way, because if I were to actually buy, then I would buy at 55.60 and above, right? So it needs to go 55.65, maybe this is the zone here for it to actually go up. So the way I look at it from the shortest term, the next 30 minutes or so, it may be playing around this area, and we don't know where it'll break out to. If it does actually break out upwards, then it will play around this area between 55.65 and 55.93 area. But all you need to do is compare one time frame and the other to give you the story of the rough trend. Here, the bias is a little bit on the upside because you have got price above all the three lines. Three line is giving you that indication that there may be a little bit of momentum to the upside for Euro AUD. But then let's compare 1 hour with a 4-hour chart. And you can see that it is still moving higher. The majority of candles, current candles and current price, they are definitely higher compared to the 1 hour. So the bias is more to the upside at the moment. And hence you can actually see that you have got some, what do you call that, appreciation of price by a single bullish candle now building this. I would guess that if it breaks out from that 55.65 area, which is the closing price of that mother candle there, then there is a potential for it to mirror this mother candle as well, this mother candle, and this mother candle. So you've got 4 very big bullish mother candle that gives you the ability to buy in this zone here. So from this zone, for example, if you were to buy at 55.65, let's say, or even if you buy now, let's say, and you can take it up to 55.90 and exit at 55.90, you are looking at 20 or so. Okay, so this is us being careful, and we are looking at, yes, there is power, there is interest in this area of 26 pips because of many mother candles there, many bullish mother candle. So once it gone above there, then it might give us again more opportunities to the upside, but we are not sure yet. So let's also mirror the reflection from the fundamental side of it as well. So at this moment of time, shortest term Euro AUD, you can make about 20-26 pips if you want to, either buying now or buying a little bit later at 55.65 until it breaks out of that yellow line. So maybe 55, because the problem there is that we are taking the risk risk of about 20 pips or so if we want to, not 20 pips, but it has to be more than 20 pips for your SL though. If you are making your 20 pips, because Euro AUD is also quite volatile, you need at least 60 pips or so, 60-70 pips as your stop loss level. Okay, so you need to ask the question of whether or not it's worth for you to do that. If you're willing to take that risk, you've got that risk appetite for that, then you can actually do it. But to lay out the opportunity, yes, there is a bit of a buying opportunity there between 55.65 to 55.92, and then you as a trader would then adjust that pricing, the stop loss level, and the way you want to enter in within that area according to your own risk management and your risk appetite. Very, very important. Okay, so that's me laying out that for you. What I can then do is we put this area here in red, resistant area there, and then support area in blue as well. There you go. So this is your support zone right there, and your resistance zone. So that's exit before the red, and buying just above the blue zone, and exit just before the red zone. Okay, so that is basically a bit of an idea right there, because it's not a trade signal from me, as I wouldn't be taking this kind of trade, mainly because I'm a, I would be more conservative in my approach to trading. But for those who wants to take a bit of risk and would like to ride along this, if it does come through here, it would be a possibility, especially if there is some news that we're expecting from the Eurozone. Okay, so that's clear, I think, for the Euro AUD. Okay, guys, so any other questions before we end the session? And you guys can continue to ask me questions, more questions in the Telegram group, also anywhere, directly messaging me as well, no problems. Pending order for CHF JPY for buy. Okay, let's look at CHF JPY very quickly. 119.10 CHF JPY. If it is too far, then we can cancel that straight away. So CHF JPY, let's see. You mean this one that we've just talked about? This one, yes, you can cancel it, but because it's just too far away, you can either cancel it or leave it, and because it's just too far away, so it wouldn't be risking you anything at this point, I think. But if you feel more secure in just canceling it, and then when the time comes, then we redo the pending order again, you can do that as well. It's entirely up to yourself. Yeah, no problem. But it's not really a very big risk at the moment. Yeah, it's very far. Okay, so yeah. This is also mirroring, coincidentally, when I drew all these things some time ago, actually, and then I decided to share it because I also thought that it would be too far away. But coincidentally, when I spotted that and I used a pattern and I do my research on that, I see that majority of the banks have this in mind as well. They actually have this zone that they were putting their trades already to buy. So that's a good sign, because they will be the ones fueling the uptrend later on. And that's how you get all these big, large bullish candles as well. Okay. All right, guys. I think that's all I have for you guys for today, but feel free, message me directly or ask questions in the GTI group. In the GTI Telegram group, we've got I think one of the most active groups of traders in there, because majority are actually trading in that group. But then we've got questions that need to be asked in that group as well, much more, because we've got a lot of shy traders in the GTI group, so they don't really ask questions so much. But if you guys are ready to share your screenshots and things like that, it might encourage them to open up a little bit more and ask you guys questions and get help from you guys as well, and also from myself. So this would actually encourage more engagement amongst traders to learn from one another as well. Okay. All right. So feel free to do that if you guys want to. All right, guys. So with that, I want to thank you for attending my webinar today. Thank you very much for your time, and have a lovely weekend, a good Friday. I know it's not Good Friday, but then have a good Friday, and because it's fasting season here as well, and Easter's coming up next week for the Orthodox and the Greeks and the Cypriots here. So meanwhile, you guys have a great weekend, and we'll speak again on Monday and on the Monday session. Take care, guys, and